Adcorp released its interim results for the 6 months ended the 31st of August 2013. I'm pleased to announce in those results we carried through the momentum that we'd achieved in the last financial year, to the extent that our revenue was up by 41%, our EBITDA was up by 26%. That a little bit flattering in that we did have the acquisition of Australian subsidiary Paxis. If we look at an organic basis, we were up about 10%, and our normalised earnings per share were up by 6%. A highlight of those results was our cash generation. We converted 93% of our operating profit into cash. That's been a tradition of the group, and that enabled us to declare a dividend at the interim stage of 60 cents. I think if we look at the market that we're trading in at the moment, one of the features is that there's been a legislative threat around labour broking. The good news is that there's been clarity obtained in that new legislation has been passed through the National Assembly, and we await the President's signature on that legislation, which is imminent. That gives us clarity and also gives us, we think, opportunity. We're finding that our market shares are growing, that clients are engaging us at a far more strategic level to make sure that they are compliant and that we are compliant with the legislation that has been promulgated. Definitely the legislation will favour the big players, the more reputable players, and Adcorp clearly fits into that category. Just in terms of the operations, the blue-collar operations of the business have done well, so have the white-collar operations. We've got a new business process outsourcing business called RightSource, which is in the call centre space. That's also gained good traction. And our training business, which has had quite a tough time due to backlogs in the registration of learnerships in the particular sector that we deal with, that has started to do quite well, and particularly in Africa. Our African operations are doing well. We recently acquired an IT contracting business in Australia, which came into the group in January. That's starting to perform really nicely. There's been a lot more certainty in the Australian economy that's been achieved subsequent to their general election, and we think that that business will stand us in very good stead into the future. Our Indian associate company, which is also in the IT space, an associate company of Paracon, one of our IT contracting businesses in South Africa, that's also performed particularly well. I think if one looks at the outlook, I think we're seeing a lot more engagement, as I mentioned, with clients strategically around what labour legislation means to them. We're seeing a consolidation of providers in our space, and that tends to favour people like ourselves. Acquisitively, there are opportunities. We've recently acquired Paxis, and we will look for other such opportunities. The group's profile has changed quite dramatically. If we look 2 years ago, 97% of our profit was domiciled in South Africa. That number is reduced to 75%, to the extent that 25% is now earned outside of our borders in Africa, India and Australia predominantly. And then our exposure to pure labour broking has also reduced quite dramatically, to the extent that we're now dependent to the extent that about 40% of our profit is derived from labour broking as defined, whereas that was about 75% previously. So I think our positioning, it's opportune. I think our strategy is right. I definitely think that we have tailwinds, and so the outlook for the group, I think, is positive, and I remain optimistic about the future.